Have you guys seen interest rates lately? Oh my God, they've been going up and up and up. In today's video, I'm gonna be talking about the market volatility that we've been seeing over the last week and give you guys a quick little debrief from what we're seeing on our side. So let's hop into the video. As we're shooting this video, this is the first week of March, so we're actually just coming off of last week where we seen rates just jump through the roof. If you're in the process of purchasing a home and you didn't lock your interest rate, chances are your interest rate is probably up at least another 0.25% today, maybe even worse in some cases. So I feel bad for you. Hopefully your lender can still make it right, get you locked in, and still take advantage of interest rates. And they're still at all-time lows. But according to the Mortgage Bankers Association, I just read an article the other day, they say that interest rates have actually been increasing 6 out of the last 8 weeks. So this didn't just happen overnight, guys. It's literally been happening week by week. Rates have been climbing up and getting worse and worse and worse. Now, there's always two sides to the coin, right? So you can focus on the fact that rates are getting worse, or you can still look at the fact that interest rates are still at all-time lows. I just had a conversation with a client the other day. We did her first mortgage here in Vegas probably 4 or 5 years ago. And her interest rate back then, I think it was almost 5%. And she's shopping for a home right now, and she's like, Sean, rates have gone up. And I said, yeah, they did, but relatively speaking, they're still good. They're still at all-time lows. Even if you couldn't get 2.75 and you got 3%, a 3% rate is still an amazing rate. And I told her, if you would have bought your house, or when you bought your house 5 years ago, and instead of 5%, if we would have gave you 3% back then, you would have been jumping for joy, right? So she took 5% back then, that was a great rate. Now it's 3%. So I told her that, rates are always relative, because you can't compare your friend or family member that's buying a house in another state and what their interest rate is compared to your interest rate. Because as a lender, when we look at how do we price out your interest rate, we're looking at so many different factors that make up that rate, like the sales price, your down payment, your credit score, what type of property are you buying? What is the occupancy? Is it a primary residence versus an investment property? Is there mortgage insurance? Is there not mortgage insurance? Are you doing a 30-year fixed? Are you doing a 20-year, a 25-year, or a 15-year? What's the zip code of the property? Where is it located? All these factors literally make up the interest rate. So when you see your friend or someone else that you talk to and let's say their interest rate is a little better, that very well may be the case, because they might have a better credit score than you. Maybe they're putting more money down than you. So all these other factors you have to take into account when you're really looking at interest rates in order to compare apples to apples. If you only get 60% of the story, there's no way you can make a comparison and say, well, hey, that guy's getting a better deal than me, because you have no idea about his file, right? Me being from Hawaii, I get this all the time. Every time clients in Hawaii would say, oh, well, rates in Hawaii are so much better than Vegas. I was like, well, yeah. Look at the credit scores of all the borrowers that are out there and the credit scores that we see in Vegas. So many times we see credit scores, they're in the 600s, 700s. And don't get me wrong, those are great credit scores. But a lot of times when we pull credit reports and do applications for clients in Hawaii that I've dealt with, we're talking 800 credit scores. They've been on their jobs for 20 years. And in Vegas, guys are moving jobs every 6 months, 8 months. So thinking from a big perspective, where is there more risk? With the guy in Hawaii or the guy in Vegas who has a lower credit score, their job is not as stable, they move around more, right? So as a lender, where would you price the loan a little better? Maybe in Hawaii, right? So these are all the kind of things that you got to think about as you're shopping for your loan, as you're shopping for your interest rate. And another thing to keep in mind is that as volatile as the markets have been lately, if you are shopping and you're just one of those that I want the best interest rate, you have to make sure that you're shopping your lenders by the hour. Because there were days I seen 3, 4, 5 price changes for the day. And what that means is that our lock desk essentially shuts down and says, you can't lock a rate right now because the market's too crazy. We need to wait for things to level off so we know where to price our loans, and then you guys can lock. So if you're shopping your loan and you talk to a guy on Monday and there's all this volatility on Tuesday, Wednesday, Thursday, you're not gonna get the same rate on Friday. So you need to go back to that guy and ask him what his rate is. So if you're shopping, you literally need to call one lender and probably get off the phone, call the next guy, and you need to make a decision right then and there. Because if you go 24 hours and seeing what we saw last week, you could have easily lost that interest rate. So, these are some of the things that I get. You want the best deal and I get you want the best interest rate, but sometimes you could literally be chasing your tail, because in the environment that we're in, like right now, as volatile as everything is, you could call a lender probably every 30 minutes and probably find a guy who's going to give you a better rate. So, you kind of need to figure out a strategy as to how you want to attack your home purchase, right? What you value in a lender and how that lender can help you become a homeowner and give you the guidance and the expertise that you need, that, in my opinion, far outweighs just what the interest rate is at the end of the day. And like I mentioned, rates are relative. I always tell my clients the story about when I bought my first house. I did my first home here in Vegas. My interest rate was 7%. 7%. That was the best rate that I could get at the time. And I was okay with that. So let's take a look at this chart. You can see over the years and over the decades, interest rates have fluctuated, but they've been going down quite a bit lately. So even if we're at 3%, 3.25% today, it's still an all-time low interest rate, guys. Don't get caught up in the interest rate so much, whether there's a 2 or a 3 in front of that decimal sign. At the end of the day, if you can afford the payment and it works within your budget, I think owning a home, taking advantage of the market, and locking something in is a great way for you to start building wealth versus chasing, the gold at the end of the rainbow that you may just never find. So don't get caught up chasing rates so much. Just know that we're in a really volatile market. If you need a second opinion on your financing, we're always happy to quote you and let you know exactly where we stand, and just give you that transparency so you know if you're getting a good deal or not. And hey, if we can help you with your loan, we'd be more than happy to help you with your financing. And as always, I appreciate you guys watching these videos. I hope you understand how crazy the market is right now. But don't worry, like anything else in life, right? There's always a knee-jerk reaction and things start to level out. So I'm sure over the next few weeks, we'll see rates start to level out again, and things will start to be a little more normalized. So thanks for watching, thanks for subscribing, and I'll see you on the next one.